Hello and welcome to Trade Maestro. Thank you for joining us. We know your time is valuable and we take that very seriously. Our presentation will begin shortly. While we wait, please take a moment to fully prepare for the presentation. First, make sure your audio is working. You should be hearing sound now. Also, please remove all distractions. The information we will be sharing is very important and we want to make sure you get as much out of it as possible. And finally, be sure to have a notepad and pen so that you can easily take notes and write down references that may be discussed. Thanks again for trusting Trade Maestro with your trading education. We will begin shortly. For thousands of years, if somebody wanted to learn a new skill, maybe learn to make boots or horse saddles, how did they learn that skill? They studied with a master. Trade Maestro builds on this tradition, the relationship between the mentor and the apprentice, but we do it all online. The term maestro means master or an artist of consummate skill. And that's what a trade maestro is. It's a person who has mastered the art of trading. I didn't want to create just another stock market trading company that sells classes. I've done that, and I don't think that's in the best interest of my apprentice. I want to walk him through the process of becoming a great trader, and you don't get there with information overload. You get there by doing it, by getting your hands dirty, by putting into practice. That's the only way to build a new skill.
I love how Jeremy teaches. I love the fact that he teaches things in such a real, practical way.
And he made me realize that I can do this.
I remember when I first started my trading journey, and let's just say I blew up at least 2 accounts.
I know this model of learning to trade works. I've had the opportunity to work with people from over 80 different countries.
And I was skeptical at first. I was kind of like, okay, are you sure about this?
I was always chasing stocks. I would always chase the next hot thing and never had an opportunity to get any profit from it.
I've helped people with trading accounts that are just a few dollars, and I've helped people with trading accounts that are over $1 million.
These courses give me a much wider perspective on what is really possible.
And what Jeremy does so well is that he breaks it down in a simple form so it's easy to understand.
They're just regular folks, and if I can teach them, I can teach you.
I didn't want to let someone else tell me what the play was and I just follow their lead. I wanted to learn it for myself.
My greatest joy is when somebody that I have taught over the last decade, they reach out and they say something like, you won't believe it, but I actually have people that are asking me to teach them how to trade. Is that okay? You think I can teach them?
Working with you taught me that, stocks go through ups and downs pretty regularly and pretty predictable.
The portion that my husband has now been able to take over and own has outperformed the market and is doing better than the rest of our retirement. It is totally life-changing.
Just to think that I touched people, I taught them to do something, I influenced a generation of traders, and now they're taking it forward and they're influencing the next.
At the end of the trade, I ended up making 140%.
It just gives me so much delight and joy knowing that I can still do something with my financial future.
This is not something that's only for other people. I can actually become financially independent.
Not only allow me to make better trades, more lucrative trades, but have more confidence while I trade.
This Trade Maestro membership is excellent because it's got something for everyone. If you're just starting out, or even if you've been trading for a while, you'll find something you like. You need to get enrolled right now. It's affordable. It's comprehensive. And it's risk-free because you can cancel anytime if you decide you don't like it. So if you want to learn to trade the stock market, or if you're looking to take your trading to the next level, you need to get enrolled as a Trade Maestro member right now. The following presentation is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All examples are for the purposes of teaching and are not intended to suggest future results. The risk of loss in trading securities, options, futures, forex, and cryptocurrencies can be substantial. Individuals must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. Well, good morning, good afternoon. For those of you that are in the afternoon hour already, welcome to Building Blockchains, where we are decryptifying cryptocurrency and blockchain and all this new decentralized finance that's taking over the world. Hope you're having a fantastic day today. I am your host, Jeremy Whaley, and I think we got a great show today. Super excited to have you joining me. If you've got your chat working, I think we got our overlays working finally. So why don't you give me a little message here? Let's see. We're going to test it right now. Are you ready? We should have chat, and we do not. That's all right. After a week or so, we'll get it solved. I don't know why it's not working. It works, and then it doesn't work, and then I don't know. I can't explain technology, but I can explain a whole lot of things about cryptocurrency and decentralized finance, and that's what we're going to be talking about today. So here is our agenda. We got a great show. I'm really excited about today. We're going to talk about some market updates. We're going to get into all of that. Then we're going to talk about the Senate giving the CFTC, that's the Commodities Futures Trading Commission, authority over crypto and this entire world of DeFi. So we'll talk about that. We'll talk about SoFi. This is a pretty big story with the first banking surrounding crypto. And then we're going to get into our crypto basics, talk about which crypto wallets you should use. That's kind of a big topic, right? And then we're going to talk about identifying the trends so you know which trades to get into, how you make profit. We had a great day yesterday. We talked a lot about how you identify where the buyer is going to show up, where the seller is going to show up, and we're just going to pick right up there today. So welcome to all of you, and with no further ado, let's get into our market updates. Te veo interesante. And it is a very red day on Crypto Street. It's not Wall Street. What is it? I guess it's Crypto Street. There is no street. Anyway, you can see what's going on here. Bitcoin's down almost $3,000. Now that freaks everybody out, but percentage-wise, it is only 2.69%. So percentage-wise, it's not really that big of a deal, especially inside the world of crypto. Taking a look at Ethereum down about similar, about 2.8%. Solana, my baby, is down over 5%, $8.89. Got some good buying opportunities coming up there. XRP, 4%, XLM, 5%. I love XLM. Last week, I had a transaction. I had some money we needed to move with a friend of mine who's heavy into crypto. And it was a large transaction. It was almost 5 figures. And we were talking about how do we get the money moved. And he said, well, I can send you XLM. I was like, that sounds like a good deal. I'm telling you, the guy was off on top of a mountain on a camping trip. If you and I on a Saturday afternoon wanted to easily go transfer that much money, how do you do it? Well, I sent him my Coinbase wallet. He sent me a test transaction of like $50. I sent him a message, said it worked. He said, okay, the rest is on the way. Before I could even get back to Coinbase wallet, it was there. It was there. Less than 15 seconds. XLM is an extraordinary protocol. It's fantastic. Cardano is down about 4%. So am I worried about these moves? Really not so much. You're looking at the Bitcoin chart right now, And as we talked about yesterday, we are right smack in the middle of that trading range. That's kind of exactly what we would expect to be happening with Bitcoin right now. We would expect it to be stuck here. And the question is always, how fast can we break out? Can we get above that level, or is that resistance going to hold us down? Right now, we're stuck. Now, if I were to zoom out just a little bit and not be overly biased on my my analysis on it, which I'm a little bit biased because I am very pro Bitcoin. I'm pro all of it. If I were to just look at this as a chart, as I would do, my goodness, I'm scooting this thing all over the place. Let's go. There we go. If I just look at this like I would any other stock chart, I do need to tell you, I see what could become what we call a flag pattern. Now, what is a flag pattern? A flag is, in this case, a bearish pattern that would suggest this trend is continuing to the downside. Why am I not freaking out over that? Because of what we talked about yesterday. Whenever you look at this chart, we're doing that at a support level. This is where the buyers tend to show up. Now, there's no guarantee that the buyers are going to show up and they're going to stay there forever. That's obviously no guarantee. Bitcoin, if you've watched it very long, it can be very volatile. And once these support levels drop, boom, it drops to the next level. And it can happen very, very quickly. But as I look at crypto as a whole, as I look at all of these different charts, take a look over here. Ethereum looks exactly the same way. We are forming a flag pattern. Oops, that's the wrong key command. Let's try this one right here. We are forming a flag pattern, but we're at a support level. That's why I'm not too worried about it. Okay, XRP, it's the same thing. We got the same similar patterns, but at a support level. Same thing with XLM. Although I will be honest with you, just because that's the way I am, always transparent. This is what I see. While I do say that flag pattern, we are at a support, we're actually just below the support. I wouldn't be surprised to see XLM drop on down to about 24 cents, which, by the way, that would be an incredible price to be able to pick up some XLM. I love this particular project. I love a lot of these. I wouldn't talk about them if I didn't love them. Solana, the one that I genuinely think is going to take over Ethereum one day, same thing. Now, the other reason I'm not too freaking out about it, that's a technical term, too freaking out. The reason I'm not freaking out too bad is if you look down here at the bottom, this is an indicator that we call our stochastics indicator. It shows momentum. All of them show that we actually have momentum building, not the opposite. So that's not a guarantee that these trades are going up right now, but it is a reason for me to not be freaking out. And that, ladies and gentlemen, is why I am not freaking out about these particular deals. So with that said, let's jump into some news. I've got a lot to cover, so let's do it. And our first big story of the day, this one really caught my attention. Senate new crypto market structure bill supercharges the CFTC. What does that mean? Well, if you don't know, if you've not been hanging around cryptocurrency very long, the government as a whole has been a pain in the tuchus for a long time, for a good reason, because crypto is a threat to their control. In its true native state, whenever you look at blockchain, you look at crypto, what can we do with this? Cryptocurrency empowers the individual to not have to have centralized control. Well, that threatens everything that a government's all about. What do they want to do? They want to control everything. What does a central bank want to do? They want to control everything. And of course, they always sell it to the people as we're doing this for your own good. So fast forward 15 years into this venture that we call blockchain and cryptocurrency, the government's realized they can't beat us. So they may as well join us, and they're trying to find a way to control us. And the agency that they're looking at doing this is the CFTC. If you're not familiar with that, is the Commodities Futures Trading Commission. I love the CFTC about as much as I love root canals without Novocaine. It is a pain in my, I guess I'll say it's a pain in my tooth, because that's what a root canal without Novocaine would be. But the CFTC sucks with a capital T. Oh, that's a capital S. They are terrible with a capital T. They suck with a capital S. They absolutely crushed what we were doing with Forex back around 2008, 2009. And the guy who was the head of the CFTC at the time, he literally said, we want to make it so painful to trade Forex that nobody in the United States wants to trade Forex. And today, that's pretty much the case. Very few people in the United States actually want to trade in the Forex markets. Well, sadly, that guy went where? He went to the SEC, Securities and Exchange Commission, where they targeted none other than XRP, Ripple. right? And so you guys, if you've been following crypto very long, they absolutely unleashed the everything, whatever you want to call it, on XRP. And it's been a couple years now, finally getting to the backside of that. But this is the difficulty that the government has created. So I'm not excited whenever I see this headline that the CFTC is going to be in charge of crypto. I personally am of the mind that we don't need any of it. And I've gone so far now in my studies of blockchain to realize that we actually don't need a central governing agency over blockchain. Blockchain in and of itself is the regulator. The math of blockchain is the regulator. We could have fully functioning free markets where all of us can come in to an exchange and we can buy and sell what could be equities, the equivalent of equities. If we take stocks and we put them on chain in the form of crypto, we could trade anything that you normally would trade on the stock exchange. We could trade it through a crypto exchange, and we can do it without a central exchange. This is a theory here. We could do it without government regulators. We don't actually need them. The whole purpose of the regulators is to make sure that people are doing what they promise they're going to do, right? That's what a central regulator does. That's also what a decentralized blockchain guarantees. But the decentralized blockchain guarantees it without the government intervention. So personally, I don't love this story. I don't love this story because I personally would love to see the CFTC go away. I would love to see the SEC go away. And I'm not trying to just be a vigilante here and anarchist. I'm just saying where we're moving in the future of technology with decentralized finance, we actually don't need these guys. And the fact the government's been shut down for over 40 days and no one seems to care, that might be all the evidence that we need, that we don't need the central regulators. Smart contracts can do everything and more that any government regulatory agency can do. Period. And I'm going to show you some stuff right now that would actually maybe support some of those ideas. All right, let's move right along there. Enough of my ranting. Let's talk about SoFi. This is a pretty big story. This one, I saw this one this morning. I was like, hey, that's cool. SoFi, if you're not familiar with SoFi, it's a bank. It's a fintech bank, which basically means they don't have any real offices. They just are all over the internet. But SoFi is a very big bank now. I think I want to say 12.5 million customers. I may have that one off. I don't know. I may be totally off on that. But look at the headline. SoFi rolls out crypto trading for retail customers. Why is this a big deal? Well, a year or two ago, they had tried. They wanted to offer crypto offerings. The Biden administration basically said, if you want to go national as a bank, you can't be involved in crypto. So it put a huge block there, and boom, it was done. Like, it wasn't happening. Now it's happening. And if you read this article, which I'm not going to read to you, but if you read through the article, you realize that it's because of President Trump's regulation, the Genius Act and the Clarity stuff that they're working on, that has empowered SoFi to go out and do it. They are the first bank. This is the reason it's a big deal. They are the first traditional bank in the sense that they deal with fiat currency to offer cryptocurrency and crypto services to their customers. You can't go to Bank of America and buy Bitcoin. You can't go to your local SunTrust, or what do they call it now, Truist, and buy Ethereum or XRP. You're going to be able to do that through SoFi. So I think that's a big story. If you're not familiar with how difficult it is sometimes to get into crypto, if you go to like a Coinbase or a crypto.com and you're trying to put a bunch of fiat currency in there so you can start trading it, they might give you immediate trading potential, but they still are going to freeze your funds. I ran into this past weekend. I was working with somebody. We were trying to get them into a project that we're working on, and we got all their funds over to crypto.com. But then when we tried to transfer it to the new project, guess what? There's a 7-day freeze. You couldn't transfer it out of crypto.com. That's the kind of regulatory action that the previous administration has put, the chokehold they've put on crypto. Well, by seeing a bank, the actual bank, that is now opening up to where you can buy crypto at the bank, this is a huge step in our evolution of making crypto mainstream. So pretty excited about that story. Talking about SoFi, actually, I just told you everything I wanted to tell you about SoFi. So here's their website. I was going to share that while I was talking about how great-ish they are. Yeah, I was right. 12.6 million members. They are advertising it now that they're getting into crypto. I forget where it was. I saw it, but it is here. And there it is right there. Right smack in the middle. New crypto. Soon you can buy and hold 30 plus coins. So it's still in the waitlist process, but I'm not saying everybody should rush over to SoFi to bank with them, but I am saying that's a big story. And that article that I referenced several other banks that are coming on board as well. This is a big deal in terms of the process of getting everybody into the world of crypto. Next story I want to talk about, Filecoin. This headline caught my attention. Filecoin price prediction, can File extend at 60% weekly rally? I saw there was like 60%. Really? Let's go check it out. I hadn't heard of Filecoin. Shame on me. So like any good crypto trader, researcher, I came over and said, well, let's see what it's doing. And I look at this, I'm like, hey, that's a pretty good move. Yeah, I see. So earlier last week, I'll make this full screen so you can see it. $1.35, $1.34. And at its peak, which was Thursday, we peaked out at almost $4. Now it's down a little bit since then, but pretty big move. So of course I did what a good analyst would do. I zoom out like, oh, that looks great. Right. And then I realized, like, hold on, let me resize this whole thing. Oh, that's the history of Filecoin. So, of course, you might look at that and think, well, this is a turd. I mean, look, it was like, what, $230 a few years ago, and it's been $1 since. Well, that's why you don't buy during the hype cycles. You buy at the bottom. Is this the bottom? Maybe. I was looking into the project, though, and it was really quite fascinating. This is what I found about Filecoin. You heard me last week talk about how crypto and blockchain is enabling us to do things that we never could do before in a decentralized fashion. And it's not about the currency. If you think about crypto as just a currency, you're short selling yourself. If you think about it as technology, you're understanding the power of it. And here's a perfect use case. So what Filecoin has done is they've created a distributed cloud file structure. So if you've ever used your Apple iCloud, or if you've used Dropbox or any of the cloud storage, that is a centralized cloud storage solution. Filecoin has created a decentralized file storage solution. And just like Bitcoin distributes all of its processing over a distributed network, Filecoin is doing the same thing for file storage. Brilliant idea. It means that not one single entity can control all your files. So you think about that. You think about how a central party decides to get politically motivated. We saw this back during COVID and, some of the stuff we've seen the last few years where, a central individual who had a political vendetta would say, you know what, I don't like this person. We're just not going to let them do business with us. We saw people being unbanked. We saw people that were being kicked off social platforms. We saw people, literally companies said, we don't like this person's personal political agenda, so we're going to not do business with them. That's wrong. That is fundamentally anti-American. Filecoin solves that in an iCloud type solution where you can get a cloud storage solution completely decentralized, and nobody can go in there and make any of those crazy decisions against you. So I'm just going to hit on a couple of things. This is a great website. Go check it out, filecoin.io. But you'll notice Wikipedia is using them now as a file solution. OpenStreet, Genome, if you're into the Genome Project, Project Gutenberg, 60,000 plus library books in this library, and they are storing everything on Filecoin. This is a project that is way bigger than I realized. I didn't know it existed. I went over Coin market cap. Look at it right here, number 51. Check it out. It's actually the 51st largest crypto project with a $1.6 billion market cap. Hello, Filecoin. So yeah, that's one that I think is worth checking out. Where was it? There it is. I think it's one that's worth checking out, and I'm going to keep my eyes on it. You guys should do the same. I think there's a lot of great stuff coming for this project. Should you go buy it? Well, you can decide based on the stuff I teach you about analysis if you should go buy it. I'm not going to tell you what you should and should not go buy. Sometimes I might suggest that, hey, this isn't really good. I like the project Filecoin. I like it. That's what I'm going to say. I like it. I'm not saying you should go buy it. I'm saying I like it. All right, with that said, let's get over into our our crypto basics. Our crypto basics. This is our segment where we're going to talk about some basics of cryptos. And today we're going to talk about the basics of wallets. So let's do it. Crypto wallets. This is a topic that has people's minds just like, I don't know what to do with it. Where do I find a wallet? And I don't know why it short circuits so many people, but some people just get short circuited with this whole idea of the crypto wallet. And so let's demystify the crypto wallet just a little bit today. And I'm going to go into the details. And by the time we're done, you're going to understand not just what the different types of wallets are, but you're going to understand maybe which ones you want to go use. All right, so let's do it. Crypto wallets, what are these things? If you think about your cash, your good old-fashioned fiat US dollars, or if you're in Canada, then your little Canadian dollars, or if you're in Australia, your Australian dollars, or wherever you live, you think about your fiat money, where do you keep it? You keep it in your wallet. Okay, now what does your wallet do? It's just it's not even a device, right? Your wallet is like a piece of leather or something that goes in your pocket, and it's a place to store your money. And then you go to the gas station or you go to the supermarket and they're like, hey, pay us for your bread. And you reach in your wallet and you pull out a wad of cash and you throw it down. You're like, take my money. Okay, that's what a wallet is. You all know what a wallet is. So the question is, where do you keep your crypto? It's digital. There's no substance to it. What do we do with this thing that we call crypto? The answer is you need a wallet. Your cash lives in your wallet. Your crypto lives in a digital wallet. They are the same thing. It's just that one is electronic and digital, and one is physical and tangible. That's it. Doesn't mean that they have any different purpose. They kind of have a different purpose, but they serve you in different ways. One's electronic and one's physical, but they're both the location where you keep your money. And in the case of cryptocurrency, you're going to need a crypto wallet. So let's demystify this just a little bit. There are three types of wallets that you will hear talked about. One is a hot wallet, one is a cold wallet, and one is not a wallet. It's a custodial account that pretends it's a wallet. But you can still keep your crypto there, just not a wallet. Okay, so let's break these down. What is a hot wallet? A hot wallet is a digital wallet that is connected to the internet. So you got a physical leather wallet you've been walking around with, you stuff it in your back pocket, you drive around with it and it starts to hurt your leg if you have a lot of money. If you don't have any money, it doesn't hurt your leg, but if you have a lot, big old fat wallet. What if you had a big old fat crypto wallet? That's just a digital wallet that's got a lot of cryptocurrency in it. It provides for you an easy way to connect your crypto to the various decentralized projects around the world. Okay, so whenever you go to a place like 1inch or DexTrade or a decentralized trading platform, how do you connect your money? The answer is your wallet. Whenever you go to a Coinbase and they say, how are you going to connect your money here? Well, in the case of a Coinbase, they've got some on-ramps for fiat. But, if you're trying to move your digital money, how do you do it? You connect your wallet. That's it. And the hot wallet, the reason it's called hot is because it's connected to the internet. And so it's easy for you to get access to it very, very quick. That's a hot wallet. Okay, it provides ease of access. It can be connected to exchange sites for easy transfer. And it is the most common type of wallet. You see all kinds of different hot wallets out there. If you do some of the free crypto giveaways, like you'll find on Coinbase and different exchanges, many of those crypto projects where they're giving the crypto away, they're actually promoting wallets. And they're trying to, to get the free crypto, you got to go download this wallet. Okay, so that is what the nature of wallets are. They are the most common type of wallet. They are also the most prone to hacking. So maybe the best way to describe it is a hot wallet. While you could keep all of your crypto in a hot wallet, if let's say you're sitting on, a few $1 million worth of crypto, do you want to keep all that in one hot wallet? That would be kind of like walking through the streets of Los Angeles, more like Nashville. Walking through the streets of Nashville with $1 million in your front pocket. You're probably just not going to do it because it's too easy to be hacked. Now, if you're in Los Angeles or New York City, you're probably guaranteed to get hacked. That's why I moved it to Nashville, a little bit safer. But, your hot wallet, it's relatively safe. You just probably don't want to keep all of your money in your hot wallet. You say, well, where do I keep it? Well, that's where the cold wallet comes in. So what is a cold wallet? A cold wallet is a digital hardware wallet that is hardware. It's a digital wallet that is hardware. It is not connected to the internet. It is not stored online. It is stored offline. Do you see the difference? So the hot wallet is stored online and you can move the funds really, really fast because it's all right there. The cold wallet is separate. It is a physical device that you can lock up in a safe. Usually it's a USB device. It doesn't have to be, but usually it is. Okay? But you can lock it up in a safe and you can keep it there with your physical gold and your physical silver and all of those wonderful things. Right? Because it's tangible. This is a tangible wallet. And it provides substantially more difficult access and connectability than a hot wallet. So if you want to protect, let's say you're sitting on a few $1,000,000 worth of crypto, and I believe that all of you are going to be doing that if you're not already doing it. The benefit of the hot wallet is you can actually keep it away from people. You can actually store it. So there's something physical and tangible about it. There's a project that I've recently become aware of. I'll talk more about it moving forward, but they actually send out physical coins that are made out of metal that are that are cold wallets. And it's a cold wallet you can store in your safe. That's pretty cool. So what you're seeing is this whole evolution of fiat physical money moving into the world of digital and back to physical so that people can keep their funds, their digital funds, safe. Fascinating. Now, what's the last type? The last type is what we call a custodial account. And a custodial account is a situation where you're going to leave your funds with your exchange and let them custodial your funds. In other words, it's not really a wallet. You have money there, you have an account there. This is more like a bank. Okay, so if you think about the metaphors here, a hot wallet is like a wallet that you would carry in your pocket. A cold storage wallet is physical and it's not connected to the internet, and you can keep it in your safe or your drawer. I'd put it in the safe, maybe. It doesn't matter. Wherever you want to keep it, but it's physical and it's not connected all the time to the internet. And then the custodial account is not a wallet. It's actually more like a bank account where you're giving somebody else custody. And you're saying, if you go down to your local bank, your local Truist or Bank of America or whoever, and you say, hey, I'm going to give you my money, take care of it. You don't have your cash anymore. It's in your account, and the bank gives you an IOU called a deposit slip, right? That's what a banking does. Well, that's what a Coinbase.com or a Crypto.com or a Kraken or Gemini. It's kind of like a bank or like a brokerage account. You have easy access. Possibly it's even more secure to some degree because they're paying for security. But it's also vulnerable, which is why most of the big exchanges now are insuring their custodial accounts. So if you go to like Crypto.com too, I think does it, but Gemini is what I was thinking of. Gemini or Coinbase, they're going to insure their custodial funds. Why? Because people are trusting them with all those funds. They don't want to get sued, so they're insure it for you. So it's kind of like a bank. So if you think about the three, you've got the three types of wallets. You got like a physical wallet in your pocket. That'd be the hot wallet. You got cold storage, which you would put in your safe. And then you got like the bank where you're giving somebody else control of it. And those are the three types of ways you can do it. Let's talk about some popular hot wallets. The Phantom wallet, this has become my new favorite, and primarily because when I built my own crypto, I discovered that some of these other wallets, they didn't take new cryptos until you had them really established. Phantom allowed us to do that. So I've been using the Phantom wallet quite a bit for about the last 4 or 5 months, and I really have learned to love it. There's a lot of really cool things about it. So you can check that out at phantom.com. Another one I really like is Exodus. Exodus is a great wallet. I mean, I really love Exodus. The only thing I haven't liked about it is they won't receive my crypto from my the one I made. But they'll take almost any other crypto. It's just that mine is brand new and nobody knows it exists yet. And there's like 10 people that have any. But I'll give you some if you want some. How many of you would like some of my Trade Maestro coin, the trade coin? If you would like some, I don't have an easy way to like connect with you, but you can send me an email or you can put something in the comments and we can connect and I'll actually send you some. I just didn't have a chance to put up a web page where I could collect your email address and send you some. But what you'll need is a Phantom wallet. I'll give you some free crypto. All right, what about Coinbase? Coinbase has a wallet. They actually have a a hot wallet. It's the Coinbase wallet as opposed to the Coinbase exchange. And then a Trust wallet. These are just 4. I mean, there's a billion of them out there. Maybe not a billion. There's a lot of them. My personal favorites right now, Phantom and Exodus. Those are the 2 that I'm using for almost everything. I have several, but those are the 2 that I'm using for almost everything. Some about some popular cold wallets. The Trezor is maybe the most popular, but the other one is Ledger. Ledger and Trezor, these 2 are kind of, taking over the industry for this area. Exodus also has a really unique platform because they have a unique interface between Trezor and Exodus. So if you use the Exodus hot wallet, it's really cool because you can connect your Trezor cold wallet to Exodus and you can trade through it, and like it's really smooth. So that's really, really cool. What do I suggest for beginners? Well, it depends on what you're starting off with and to some degree how much money you're starting off with. But I think as you get started, start with a custodial account. It's the easiest for you to understand. Go to something like Coinbase or Gemini or crypto.com. Get yourself an account set up. It's like opening a bank account. It's really easy. They'll do all your KYC, that's your know your customer, KYC, anti-money laundering. Who would ever do that? I would start there. And that's a good way to get your feet wet. And then I would move over to either Phantom or Exodus. I like both of these. I use both of them. I have 85% of my crypto in one of these 2 wallets right now. Like that's the way I am. And then from a cold wallet standpoint, I think either the Ledger or Trezor, either one. I think both of them are going to serve your purposes. And there's, like I mentioned, there's a new company that I just discovered. They're actually selling physical coins, like they're minted out of, it's not gold and silver. Maybe it's copper or something else. But, and they actually, you can store your crypto on those as a cold storage solution. So I'm just looking into that. Just learned about that last week. Really cool project, but I'll learn more and share more of that with you. All right. You just go to Exodus or Phantom or wherever, one of those, and get yourself set up, or in the App Store on your phone. Get yourself set up. And that, ladies and gentlemen, brings us to the end of our crypto basics for today. If you got any questions about that, type it in here. Let me see. I'm going to try it again. Let's see if I can bring up our chat. Well, I brought it up, but there is no chat in here. But that's not true because there is chat. It just won't sync. I don't know why. It should. It's supposed to be there. I want you guys to be able to see it. Derek says he wants some. Oops. Sorry, I got buttons pushing all over the place. Derek says he wants some. Aaron said, I crack her up, mic drop. I don't know what it was, but it was, thank you. Appreciate that. Love you too, Aaron. And Derek says he's short-circuited on crypto wallets. You can't be short-circuited. Was it that complicated? That's the basics. You can do this, Derek. You can do it. Let's talk about how you make more money with your crypto. Yesterday, we talked about support and resistance. Today, we're going to take it over and talk about trend lines in our segment that I've now renamed Crypto Alpha. If you are not familiar with the term alpha, alpha is a term that we give in trading to, it means the edge. It means you got an edge. So if you have a trading alpha, you've got an edge. And in the world of crypto, that's what you're looking for. You're looking for the edge. How do I know that I can make more money with this thing? So getting a little bit more advanced here, I want to talk about trend lines. Yesterday, we talked about support and resistance. We identified support as the price point where an asset finds more buying pressure than selling pressure, and the buying pressure drives the price of that asset higher. I used this example right here with Solana, and I said, look, right down here, right around whatever that price was, 20 bucks or so, the buyers just started showing up. And when the buyers show up, what is it? It's starting to provide support. And then eventually the trade starts to rally and it runs into a wall or a ceiling, and we call that resistance. This is the price point where an asset finds more selling pressure than buying pressure, and the selling pressure drives the price of the asset lower. And looking at Solana, that selling pressure showed up right around the $250, $260 mark. So how does that translate to trend lines? Well, guess what? Trend lines are the next evolution of creating your alpha. Trend lines are the next evolution of how you make money with trading. And what we call this is trend trading. This is the most profitable way you can make money, hands down, flat out. That's it. You want to jump on a trade that has lots of momentum, a trade with a trend. So naturally, you need a way to identify that trend. And I'm going to show you the simplest, most old school way. And in future episodes, I'll show you some hacks, how you can make it even faster, like at a complete glance. But you need to understand the basic idea of trends first. So let me introduce this for you. Take a look at this chart. There's nothing that's more painful than buying and holding a trade that does this. How many of you have ever done that? Some of you did that with XRP. How many of you did that with XRP? Let me see it in the chat. If you bought some XRP, you're all excited about it, and then you just watch it go, and it tanked. And some of you like held through forever, for months and years. And now you're finally back to break even, or you're finally maybe a little bit in the profit. It's because you didn't recognize the trend at the time. Way back when, I'm not going to go back and show you on the chart, but way back when XRP started to really make a huge splash in the community, the trends actually reversed, but social media was very late catching up on that. And a lot of people started buying XRP when it was really high. And so they took on huge positions way too high. And then they just sit here upside down for weeks or months or years, beating themselves. What is a trend? A trend, we're going to identify it this way. It is a consistent rising or falling in value of an asset over a period of time. That's a trend. A consistent rising or falling in value of an asset over a period of time. Now, there's two types of trends. We've got what we call bullish trends and bearish trends. A bullish trend is a consistent rising in value of an asset over a period of time in which it can be identified by consistently higher highs and higher lows. And this is a very important phrase for you to get comfortable with. Higher highs and higher lows. When you can identify that a crypto is making higher highs and higher lows, guess what? It is trending. It is trending in a good direction for you. And it's really simple. All you need to do is look at the price chart. All you need to do is look at the price action, the stuff that I'm teaching you here in building blockchains. I'll get my words out. Notice this picture that I've put on the screen here. The white line represents the price action. And you notice how the price goes up and it comes down, and it goes up and it comes down. But each of the highs is higher than the previous high. And each of the lows is higher than the previous low. When you have a price action that is consistently making higher highs and higher lows, you have a bullish trend. That's the kind of trade you want to jump on. That's the kind of trade that's going to make you money. Now you flip that and you look at the other side, and this is a bearish trend. And a bearish trend is a consistently falling in value of an asset over a period of time in which you can identify it by consistently making lower highs and lower lows. Lower highs and lower lows. It's the same principle, it's just inverted. So you can look at the white line, if that's the price action, you can say, look at each of these swing highs. When the swing high is lower than the previous swing high, you have a sequence or a series of lower highs. And when each swing low is lower than the previous swing low, you have a series of lower lows. This is by definition a downtrend. And a downtrend is not when you're making money, unless you're short. But I'm going to go on a limb and say of all the people that might watch this episode, 0 of you are probably going to be shorting crypto. Maybe 1, probably 0. Because crypto is a little more complex to short. It's not as simple as shorting stock and some of these other things that we trade. So most of you are going to be buying crypto only, which means you're not looking at the short side, which means a bear trend to you is kryptonite. It's going to hurt you. So you want to try to avoid a downtrend, and you want to get into bull trends. When a crypto is going up in value, you want to jump in. When it's going down in value, you want to get out. Take a look at some of these charts here. Notice on the left, we have a series of higher highs and higher lows. It's an uptrend. On the right, we have a series of lower highs and lower lows. It's a downtrend. One of those looks more exciting than the other. So how do we know? How do we start drawing trend lines and identifying where the trend is going? And the answer is very simple. Trend lines are simply nothing more and nothing less than a diagonal support and resistance. You learned that yesterday. If you watched the show yesterday, you learned support is a price point where buying behavior shows up and buyers drive the price higher. Resistance is the price where sellers show up, and selling pressure drives the price lower. If you take support and resistance and you turn it on its angle and it's moving diagonally, you now have a trend line. Take a look. Same example, put a diagonal support and resistance line on it, and you're like, oh, that's the same channel that we learned about yesterday. It's just moving at an angle. On the right side, it's the same channel we talked about yesterday. It's trade moving sideways in a predictable repeating pattern between support and resistance. It's just moving down at an angle. You see, this is simple. All of you can learn to do this, but in order to learn to do it, you have to dissociate from all the BS that you've been taught over the years. You have to stop believing that, oh, if I can figure out what the future value should be, I'm going to buy this thing. Oh, everybody just said, go buy XRP, so I bought it. What do you think it should be worth? Is it worth $5 million? That's how everybody talks. No, I'm just kidding. But that's the way people treat it. People are like, oh, somebody told me I should buy it, so I bought it. What should it be worth? It doesn't matter what it should be worth. There's no answer to that question. You learned that yesterday. What matters is what's happening right now. And what a trend line does is it shows you that there's a trend in social behavior that is driving the price higher over time. And if you can get into trades that are trending in an upward direction and the price is going up over time, you're getting into winning trades. So how can you do it? How can you draw these trend lines and start to benefit from trading trends? I'm going to give you the steps right now. Here it is. Number one, you start with a line chart. Start with a line chart. I guess I should probably give you a little bit of charting basics before we get into this. If you've never learned anything about charting, let me give you Charting 101. I'm going to bring up my charts right now. And this is a price chart. I look at them in every episode that we do. I live on price charts. It's what I do. Okay. Now, this particular, I'm going to get rid of these lines that we put on Bitcoin. This particular chart that you're looking at is Bitcoin. And whenever you see these little red and green things, we call these candlesticks. I'll teach you something else about candles in the future. But those are called candlesticks, and it just simply represents the price action of Bitcoin. This is a candle chart. I'm going to flip it over, and you're going to see a yellow line now. And this is called a line chart. So you're going to see primarily from me two types of charts: a candlestick chart or a line chart. Now, what's the difference in these two charts? You know, I'm glad you asked. You didn't ask, but I'm going to tell you anyway. Okay. When you deal with candlesticks, candlesticks have 4 price points involved. They have the opening price of the day. They have the closing price of the day. They have the low price of the day marked on the chart, and they have the high price of the day marked on the chart. 4 price points: open, high, low, and close. Now, if you see your candlestick and it is hollow in the middle, like that, I don't know where the radial menu came from, but let's see if we can't get rid of this. There, we got rid of it. If you see your candlestick and it's hollow in the middle, that means the closing price was higher than the opening price. If you see your candlestick and the candlestick is solid, like I'm drawing on the screen, that means the closing price was lower than the opening price. So when you look at these red and green candles, you notice that my green candles are kind of hollow. That's because they're higher closes than opens for every one of those candlesticks. And the red candles are solid because it's a lower close than open. That's it. That's all a candlestick is. It's really simple. Okay. Now, what is a line chart? If you had a whole bunch of candlestick charts lined up, and you took the closing price of each of those, which I will do with a different pen color, I think, if I can remember how to change my pen color. Oh, that didn't do it. There. So I'm marking the closing prices with a little dot. And if we were to connect the closing prices, that's a line chart. That's all a line chart is. So a candlestick chart has all the open, high, low, and close data for every single time, for every single day on the chart. Every one of those. Okay, and I can tell you if I hover over today's candlestick, you can actually look in the upper left corner of this screen, and there's your open price, your high price, your low price, your closing price of the day. And that's what that candle's telling you. And if I were to hover over the candle next to it, it's going to give me the same data. And the next to it, every one of those. And it's all drawn out on a chart. It's really simple. Once you understand it, it's really simple. If I flip that over to a line chart, there it is. That's what it looks like. Okay, so there you go. Now, all of you have your charting basics. Now that you have that, let's resume our regularly scheduled educational experience. How do I draw trend lines? You start with a line chart. Why do you start with a line chart? Because it's easier to see. That's why. And if you start with a candlestick chart, you'll actually get off in drawing your trend, unless you really know what you're doing. But the easiest way to start is start with a line chart. Next, you find the last major turn. The last major turn in the trend. And I'll show you that in just a second, because we're going to go do one. Next, you start with the last turn and you swing up or down, depending if you're doing a bullish trend or a bearish trend. If it's higher highs, you swing up. If it's lower lows, you swing down. And then we're going to draw a line connecting at least 2, ideally 3 or more turning points. That will establish your trend. And after we're done, we flip over to our candlesticks to see if there's any additional confirmation or something we didn't see. Let me show you some examples. Let's take this hypothetical example. And let's say that you've got a trend that's humming along like this right here. You go to the last major turning point. So I go to the very, very bottom where I've circled it in green. And I'm going to draw a line out. And I'm going to swing that line up until I connect at least 2 of the swing lows. And there's my trend line. Now you'll notice in a bullish trend, in an uptrend, we always draw the support line. Because the support line, this one on the bottom, is the one that's driving the support up for the trend. So that's a trend line. It's a support line that you can draw on your trade. Now, if it's a bearish trend, it's just the exact same thing, but backwards. We're going to find the swing high, the biggest, baddest swing high you can find. We're going to put a line out there and we're going to draw it down, swing it down until we connect at least 2, ideally 3 or more turning points. And when we've done that, we have identified our downtrend. See, that's simple enough, isn't it? Anybody can do this. I know anybody can do it. I know because I've been teaching people for 16 years how to do this. Let's go over here to a actual chart and let's go do this. And I'm going to zoom out. And the first thing that some of you might do, as you learn more about charting, you'll understand this better. But the first thing that many of you might do is you zoom in too far. So this is really, really close. If you get too close, you're going to get wrong data. So a lot of people would look at this chart on Bitcoin and they would try to draw a line and they're like, well, there's my downtrend right there. Well, you would be kind of correct, but not really. Because while that is a downtrend, you're totally missing the fact that you are hyper zoomed in. To really see the picture, you got to go back in time. And you got to zoom out several years. Usually I do about 5 or 6 years. And you can see the trend evolving here on Bitcoin much better. You see, if you are zoomed in right up here, you are not seeing the big picture trend. You're not. You got to go back. And for this particular chart, where the trend began was right here. Okay, we can actually go further. That's all. Okay, that's as far as we're going to want to go. The first big surge happened in 2017. This is the beginning right here. That's where you're going to want to draw off of. So I'm going to do that. I'm going to come to that point right there, and I'm going to draw with a trend line. I'm going to come down here, just like I showed you. I'm going to draw a line out, and I'm going to swing it up until I connect at least 2 points, and boom, there it is. There's your trend. That is your big picture trend, the one that's going over multiple years. Now, you'll notice in the case of Bitcoin, it's okay if sometimes some of these come below. You're looking for connecting as many as you can connect here. And that's where we connect. That's where we can connect a lot. You'll notice in the case of some, such as Bitcoin, that after a while, it doesn't make it all the way back down to the trend. It doesn't trade up and back down to the trend line. And when that happens, It's actually a variation of a trend that we call a fan line. And since this presented, I have to teach it to you. And basically what we're going to do is we're going to take the point of departure and we're going to start drawing to the new angle of attack or the new angle of the trend. And that's it right there. So what I'm going to do is I'm going to take my trend line tool. I'm going to come out here and I'm going to swing it up until I can connect several of these. And you can see right there is the angle. Now, with that as a perspective, how much more does it look like Bitcoin might get stuck right here, just like I told you? Might get stuck right here, might sell off a little bit, but not a lot. Could you see Bitcoin selling off a little bit more and then rallying out of here to continue the trend? Yeah, of course you can see that. Now that you see it, now that this crazy price action chart has been decrypted for you, now that it's been explained, you realize that actually it's not crazy at all. It's actually really predictable, and there's actually a very disciplined trading behavior happening with Bitcoin, and it happens with all of them. Unfortunately, I don't have time to go into all those details today, but this is a good example for you, and I hope it really helped you. So ask me whatever questions you might have about that. Type it into the chat, and you can go practice that on your own. The charting software that I'm using is a charting software called TradingView. You can get a free version of it. It's at tradingview.com. If you want to get rid of the ads, it's only like 15 bucks, but you can do everything that I'm doing with the most basic version of TradingView. This is absolute charting 101. TradingView has the most complete data set of crypto charts. It's really the best charting software on the planet right now. So there's no reason to not use it. And even at the paid version at 15 bucks, it's cheap. Like, it's dirt cheap. My first charting software, I was paying $3,000 a year for charting. The fact that we get what we get with TradingView for 15 bucks a month is unbelievable. And you can actually do it for free because you just have to put up with ads. But if you can deal with the ads, you'll be fine. Ladies and gentlemen, I hope this has been helpful for you. Let me know what you think. If you have not done so already, please like and subscribe. Like and subscribe. We're live every day at 2 o'clock Eastern Time, 1 o'clock Central Time, noon in the mountains, 11 o'clock on the West Coast. You can find us on Rumble at Trade Maestro. You can find us on YouTube, Trade Maestro. We actually have a Telegram page that I need to put some more content up, but we will put more there. It is Real Trade Maestro. And believe it or not, I have a Facebook page. I love Facebook about as much as I love root canals, and I don't love root canals very much. But we do have a page, Trade Maestro Official, because somebody set up a Trade Maestro page for me and they messed it up. And we can't get to the one that said /Trade Maestro. So it's Trade Maestro Official. You can follow us on all of those platforms and tell your friends and your family. And I tell you what, if you will help me spread the message, if you haven't followed on Rumble, please follow. If you haven't followed on YouTube, subscribe, please do so. If you'll help us spread the message, if we can start averaging 100 participants a day in our live stream, I will give away free crypto. I have free crypto that I'm willing to give away. Just like literally, I just send it to you. But we got to start averaging some bigger numbers. So you help me get 100 people here, and I will help you start building your crypto bag. That is the deal. And the next time we're going to do that is tomorrow at 2 o'clock Eastern Time, 1 o'clock Central. Thank you for being here. I wish you all the best. Have a great day. Happy trading to all of you. We'll talk to you soon.